Hello, chicken gang! Don't be a donkey! Hello, chicken gang! Did you know Tesla is no longer a growth stock, chicken gang? Don't be a donkey! Welcome back to Strawman Personal Finance. That's true. Apparently, Tesla, la Tesla, the future bro, is no longer a growth stock. That's according to the world famous, superstitious, delicious, multi-trillion gazillionaire, chicken genius Singapore, or as I like to call him, chicken butt crack. Now, he makes very short videos, and he basically just shills Tesla, because Tesla only goes up. It's the future, bro. So let's see what he has to say about why La Tesla is no longer a growth stock. Oh, I'm so excited. He's taught me so much. He's made me a better investor. 100% Tesla, bro.
Hello friends, welcome back. I confidently declare Tesla is not a growth stock anymore. You see, Tesla is not the stock we used to know. Is it good or bad? It's bad for me and it's good for you. Let me explain. What defines a growth stock? A growth stock performs well in low interest rate environment. Growth companies do not need to profit. Investors will fund them. Their only job is to grow revenue and gain market share. The main reason why Tesla is not a growth stock anymore, Tesla stock is the only growth stock that's not being affected of the news of inflation. Every other growth stock, basically you look at the ARK Invest portfolio, they're all dying. Watch the money flow.
So apparently Tesla is not a growth stock because it didn't go down because of inflation and stuff. So let's go look at some of the metrics and let's see the pricing and see if it's actually priced as a growth stock. Something tells me it is, okay? Growth stocks are known for very high price to earnings ratios, very high price to sales ratios, because their earnings are expected in the future, which is why people are paying a premium for them now. Now, if you look, the PE is 300 almost. 300. That is almost the definition of a growth stock. Price to sales, 21. But the stock didn't go down because of inflation, because it's in a massive hype bubble. Just because the stock didn't go down on inflation fears doesn't mean it won't go down in the future when a lot of people realize this stock is a massive freaking bubble that is sustained purely by hype. But let's hear more about what Chicken Buttcrack has to say. He had some really interesting points.
Money is flowing into companies showing profits and the ability to increase future profits. So why is this bad for me? I love volatility. When prices swings up and down, I take advantage of it. You see me done that multiple times. Tesla has moved into Google, Amazon, Apple territory. If there's a 20% correction, count yourself lucky to buy more. You are never going to get another 70% crash short of a crisis. Inflation.
That is a very interesting point. So supposedly, Tesla is the equivalent of Microsoft, Google, and Apple. Now, the market cap, sure, market cap's the same. So Tesla's market cap is $1 trillion and some change. Let's compare that to Apple, okay? Apple's market cap is almost $3 trillion. So Tesla is in the $1 trillion market cap range. However, look at Apple's revenue, $365 billion with a price to earnings ratio of 31. $365 billion. Tesla's revenue, let's see. Oh, it's only 46. 365, 46. Those seem very equivalent, don't they? Let's look at Amazon. What could Amazon's revenue be? I mean, they're in the same ballpark, ladies and gentlemen. $457 billion of revenue for Amazon. Same exact ballpark, ladies and gentlemen. It's the same thing. Tesla can't possibly crash 70%. There's no freaking way. What was the other one? Google. Let's see what Google's revenue is. $239 billion freaking dollars. So supposedly Tesla belongs with the likes of these massively profitable, massively generating revenue giants. Tesla's the same because their revenue's the same. No, wait, no, it's not. It's not at all. Now, I firmly believe Tesla should crash probably at minimum 80 freaking percent. This company does not deserve a 21 price to sales ratio. A $1 trillion market cap on 46 billion of revenue. That's freaking nuts with a PE of $292 with a profit margin of 7%. Seriously? Are you freaking serious? This is crazy, okay? This is a massively overvalued bubble. It has only been sustained by massive hype and because people have seemed to have forgotten that it's a car company. It is a car company, okay? You compare it to other car companies, not much of a comparison. Think about it this way. Apple. Basically, every person has an iPhone. It touches our lives. People have iPhones, iPads, iComputers, iMacs, whatever you freaking call them. Amazon. Most people probably shop at Amazon. It touches everybody's lives. Google. Lots of people use Google. Lots of people do use YouTube. How many people have a Tesla? Almost none. When you look at the world, even the United States or even the world, barely anybody has a Tesla. Tesla does not have anywhere close to the daily impact on people's lives that Google, Microsoft, Amazon do. Microsoft, they have basically every operating system runs on Windows. Oh my God. So you mean to tell me all these giants that I just mentioned are the equivalent of Tesla? Just honestly think about it. Does Tesla touch your life? Does it touch you? The same as all these other companies I just mentioned? Of course it doesn't. Tesla does not belong anywhere in that category. I've seen like 3 Teslas and, tens of thousands of cars. But, it's the future, bro.
Fears brought Tesla stock down 40% back in March. This time, nothing. So what does this mean for you? You need to invest in Tesla stock like Apple, Google, and Amazon. Your dollar cost average consistently. Gone are the days of another 40 to 70% drop. Again,
really? With those insanely high metrics and valuations, and the fact that it's a car company and that it's currently benefiting from a hype, EV bubble, there's no possible way it could drop 40 or 70. It's basically Apple, bro. Apple, everybody has an iPhone, iPad, basically touches every corner of the world. And Tesla, it's the same thing, bro. So you might as well, if you want to have your money in stable large caps, you might as well put it into Tesla.
Short of a crisis. For me, on my main account, I've shown you guys borrowing diamond hands. On second account, I trade options. My strategy is selling puts, profiting from a less volatile movement. Wrapping up, welcome Tesla investors to a new era. A boring era of Tesla stock. There's no need for me to tell you to invest safe. Tesla is too safe, too boring. My grandma will fall asleep watching the stock move. Appreciate a thumbs up. I hope you learned something. See you in the next video.
Well, there you have it, ladies and gentlemen. If your mom wants a stable growth stock, or not a growth stock, but like a stable value stock that's not going to fluctuate, don't put your money in cash or short-term bonds. Just put it in Tesla. It's the same thing as Apple. Everybody has a Tesla, just like everybody has an Apple. Woo! Man, I cannot wait to see the look in these people's faces when this freaking stock finally gets annihilated. But we may have to be patient and wait. It's very annoying. Very, very annoying. But that day will come, ladies and gentlemen. Mark my words. Anyway, that's it. Chicken Butt Crack is a moron, a degenerate, and a clown. And you should not listen to his freaking advice. You should max your tax advantage accounts and buy Total World Stock Market Index funds. And that's it. Have a wonderful night. Cheers!